And thank you very much for joining us here on PM Express. You must have observed that in the last few days, there's been a tussle between government and Moody's, one of the international ratings agencies. They, in essence, have a certification that says, yes, you are credit worthy, no, you are not. And in the last few days, they have given Ghana a serious whipping in terms of our credit worthiness. They're simply saying that we are not credit worthy. I mean, people shouldn't be giving us money. If they do, they're taking a huge risk in doing so. Government has taken this up very seriously. They've taken this to the AU. The AU's organ, the peer review mechanism, has issued a statement. Very unprecedented fight that is ensuing here, with government saying that indeed they are challenging the basis of that. You've heard all that already, but here's the thing. Have you stopped to pause to consider what this means for you, for your pocket? That is what we're going to be doing tonight. We're going to be breaking this down, hopefully for you to understand, and so we can all appreciate why this is such a big deal for government. Indeed. Let's start with what the reality is on the ground, because we know right now that the three ratings agencies, Fitch, S&P, Moody's, have all this year, in essence, given us a serious whipping when it comes to whether or not we are credit worthy, whether fundamentally people should be giving us money to run our economy. We'll come to the fact that this economy is an economy that is run on borrowed money because we don't pay enough revenue, government has told us. And so you see that the Fitch is rated as what, B1. S&P is the most favorable of them, but this was a downgrade. This maintained what they did in terms of last year to this year. And the Moody's is the biggest one, because we talk about triple C here, which is a big one, which that the government, of course, is very unhappy about in terms of its impact on us. Now, the reactions have been very swift indeed. We've seen the finance ministry say that they refer this to that there's a bias in the rating that they've talked about, which is a very serious accusation of Moody's. They've also talked about Moody's failed to consider key information that they give to them to consider as part of calculating this. Now, we've talked about President Akufo-Addo himself has taken this up at the AU level, saying that the African countries must guard against these ratings agencies, putting a spanner in our wounds when we are down and kicking us whilst we are down in the midst of the pandemic. And there's this bias theme seems to have continued. In the wake of the president's own, sessions on this, the AU's organ, the Africa Peer Review Mechanism, jumped in. They said they agreed with the concerns of the Ghanaian government as far as Moody's is concerned. And so, of course, they are asking Moody's, in essence, backing government to say, review what you've done because you considered, information that was not complete. Now, the thing I need to do this because it's important to understand when it comes to the ratings agencies. Let's start with Fitch. The historical ratings that has happened over the year. This is not the first time this has happened. But what you'll begin to see in the trend I'm about to show you is that this is the worst it's been in a long, long time. Let's start with Fitch, because this is the best for Fitch. If you look at the Fitch, the B+ for Fitch, this is stable outlook. The rings around it gives us a stable outlook. They gave us in 2013, when it first came onto the scene, rating Ghana, for example, a B+. Why do you need the ratings? Why do you need them? Because I am going to lend you money, right? I need to be sure that you can pay me back. And you need somebody, an independent person, who can tell me who is giving you the money, that if I give you the money, you can pay me back. The independent person will come into your life and will come and assess your ability to pay me back. And they will report back and say, listen, you can pay me back or you cannot. And that's where they come in. So they started off in 2003 and said B+, junk status, but with stable. So that was good. But if you look at that, so we stayed at this for a while, it alternating between, positive outlook to negative outlook for quite a while. But pay attention to what happens when this government came into office. Before they came into office, according to Fitch, the last time they did this was 2014. They gave us a B with a negative outlook. And then right after that, we came to the 2017 when this government came into office. And they gave us still a B, but with a stable outlook. And the government, they were very happy with this because of where we're coming from after the elections of 2016. And they said, listen, well, this is good for us. But look at where we are. We've never been here before. We've never been here before. We've never been here before when it comes to Fitch, right? Fitch is now telling us that we are now B-. First time they've done that, by the way, when it comes to Ghana. And we are also with a pretty negative outlook there, which is a fundamental problem for government. I'll tell you why government cares and why you probably should care also. Let's go to Moody's, and this is the one that has really got government really upset. And remember, their petition that they've written, the concerns and the press release was about Moody's, because Moody's downgrade is the sharpest of the three. Because Moody's is telling us that we are we are CAA1, that's a triple C, that is super junk. In other words, the bond that you float, your ability to pay, you can't pay. You are so down there, there's so much risk around you. If I give you money, you will probably default. That is how bad they are. They're telling that we are. But there's some silver lining there, which is that the outlook is stable going forward. They are projecting that we have some mechanisms to make sure that, well, the economy will probably be stable going forward. But fundamentally, if I'm going to give you money, I'm going to look at what Moody's has said. Now, if you look at S&P is probably the most favorable, because all they've done is to maintain our ratings from 2020 to 2022, in essence to say we are B- and we are also stable. So no problem there. That's why you haven't heard government say much about the S&P one, but they're saying a lot about Moody's. Let's now begin to understand what this means. I've said a bit about this, but fundamentally, if you look at what this is Moody's, very high credit risk. What are they telling the investors? Don't forget one thing, Ghanaian economy, we run on borrowed money. I'll tell you why very shortly. The graphs tell the story. Very high risk, very high risk. If you give you the money, if they give us the money, we might probably not be able, we'll struggle to pay, but that's what they're saying in essence. Junk, what this means they're telling the world is the high interest rates. What it means is that if it's risky to give you money, then it's going to cost you more to borrow, which is in essence what is going to happen to Ghana. So high interest rate. Have you borrowed from the bank before? If somebody tells the bank that you may not pay back, but the bank decides to give you the money, the bank is going to charge you killer interest rates, which is what is happening now to Ghana out there. Higher risk of default. For me, this is fundamentally the apocalyptic scenario. When a nation, a sovereign state, is unable to pay back to those who have given it money, it is apocalyptic. The last time it happened to a country, it happened to Suriname recently, but it's happened to Argentina. They began to sell Argentina's assets internationally. That is how bad it is. So we really don't want to get here at all. Then limited access to funds. For a country that runs on borrowed money, if you can't go and borrow more, we are in deep trouble. But that is what it means for the Ghanaian economy. Very, very difficult times indeed on the back of these ratings. Now this picture here, it's in the 2022 budget. This is what tells the story. If you're watching this is what tells the story. Because listen, compensation, everything that we earn as a country, two line items take 72.9% of that. The major one, and for the first time, I'll show you a trend analysis. For the first time, interest payments, what we are paying for the loans that we've taken, the borrowing that we've done, for the very first time, what we are paying all those people who have lent us money exceeds what we pay to you, the workers in the state, including you, TAG, by the way, who are on strike, right? And so you see here, compensation is 35.8 billion, but interest payment is 37.5 billion. By the time we finish these two items alone, we are only left with 27.1% of all the revenue and everything else that we make in this country to do what? To do roads, subsidies, goods, and services. That is how dire it is. Have you asked yourself why it's been a month? Utah, the university lecturers have been on strike, and government cannot agree to pay them what they are asking for. It is because of this particular problem, with all three ratings agencies telling the people out there who give us money that we cannot pay. The cost of this interest payments is going to be high. Pay attention to this. This is the 2022 budget projection. So government has already said that this year they expect to pay 37.5 billion in interest payments alone. But what the ratings agencies have done, in essence, says government is probably going to pay far more than they had projected this year, possibly. And there's already Reuters reports that says that already our bonds are pricing very high, the interest is going up. So with more money to pay interest payments, there's going to be less money for compensation, and there's going to be less money for roads, subsidies, goods and services. If there's less money for compensation, UTAG will not get what they are asking for. The doctors will not get what they are asking for because government can simply not pay you your salaries and your conditions of service you're asking for because it's using more of the money to pay off interest payments because the ratings agencies say it is risky to give money to Ghana, and so if you want to give money to Ghana, you expect that Ghana will pay you a lot more interest rates. That is where the trick is, and that is why government is very, very upset about this. So pay attention to this. It has an impact directly on your pocket. So that is the story here with what we are talking about. Now, look, this is Reuters just on Monday telling us that already. Look at what Reuters says. Ghana's international bond yields, it's 10% there about since fourth quarter of last year. But currently, as we're talking about, it's nearing 13%. Yields, it simply says the interest that we are paying those who have lent us money is now at 13% nearly. This is according to Reuters. So we are beginning to pay more. It's going to cost us a lot more. But here's the trick. It's going to cost us a lot more. But Reuters says Ghana is effectively shut out of the financial markets. So we have been borrowing to pay our interest. We've been borrowing to run the economy for so long, but because of these ratings agencies, ratings and downgrades, we are in effect being priced out of the financial market. So we can't go to borrow anymore. We cannot access it effectively because if you go, you are going to pay killer interest rates. Nobody will want to do that, especially when we are already suffering. So we can't borrow, and we still have a lot to do. We have to pay your fees. We have to pay free SHS. We have to build roads. That is government's word here. And that is why government says they are fighting back. Okay. So we have bonds also issued. And again, this is still Reuters. Bond issued in international capital markets now are falling. There's a fall across the curve with some longer dated debt tumbling nearly 3 cents in the dollar and trading just 70 cents. What it means fundamentally is that a lot of people who are already holding government bonds, who have lent us money, they are dumping the bonds. They don't want it anymore. They are afraid. A few people, some of them are dumping. They say they don't want it because of what Fitch is saying, Moody's is saying, S&P is saying. They are saying they don't want it. But if they don't want it, there is an effect there. The effect is that there's going to be pressure on your foreign reserves. The foreign reserves is what all the foreign exchange in dollars you have stored, which you use, to cover yourself, and that is important. The Bank of Ghana will now have to fall on this to pay off those who are dumping Ghana's bonds that they are holding. They don't want it. They are afraid. It's risky to hold it, so they don't want it. They're giving it away. Bank of Ghana will have to fall on the reserve that we have to give them. What that happens is that you are going to put pressure on the foreign reserve. You put pressure on the foreign reserve at a certain threshold, IMF obviously will be ringing in your head. Government says they're confident in reaction to a Bloomberg report that we can stand on our ground, we can pay, we can meet our obligations to our investors because we have 4 months of import cover. Now, that is going to be affected if we have to pay a lot of those who are dumping. And then we have exchange rate implications also, putting a lot of pressure on the city. But here is the curve here that tells you, tracking for us the interest payments and compensations over time. And look at that. When we started this tracking in 2012, we were doing compensation, paying workers, UTAG, etc. We're spending more of everything we earn as a country, 7.2 billion cedis, and we're spending only 2.4. Pay attention, only 2.4 billion on interest payments. That is 2012. Come to 2020, for the very first time, as we've seen here, it started in 2021 here. We are now beginning to spend more on paying interest than paying for worker salaries. So UTAG, this is the problem here. This is the problem. That's why government says, well, government is struggling to meet your demand because they've not got the fiscal space to do it because there's a stranglehold of Moody's, of Fitch, of S&P, the real implications of this. Now, this tells a whole different story. So percentage of total revenue of interest payments, total revenue that we make as a country, right? 37.31%. So that is interest payments alone is taking that, right? And tax, all the tax you pay, 46.78% is going to pay interest to those who have lent us money. Pay attention to that. That is a pretty key important information to consider here. Now, I also want to factor in this trend analysis. So this is the interest payments versus total revenue over the years. And you begin to see how when you look at the revenue as against interest payments, it's getting worse and worse over the period. Now, here is, for me, the most important part of this conversation. And I want to pay attention. I want you to pay attention to this because this is about the masses. I'm talking about interest. I'm talking about investors. But it's about the masses too. Because government will now be paying more for the interest. Remember that what I showed you, which is now even more than anything else that we can spend our money on as a country. Because government is paying more interest now, because of Fitch rating, because of Moody's, because of S&P, there's little money for government to do a lot of things, right? Little money for government to cushion you. Little money to pay subsidies. Remember that fuel prices have gone up. There's a cry yesterday on this show by the transport operators that government should try and consider subsidies. Do something to protect us. We have the price stabilization levy. Part of that was to cushion you in times like this. But listen, government is going to now spend far more. It's going to cost them more. Because of that, government can use that money to cushion you in the wake of the fuel prices going up, which, by the way, OMC say it might cross $8, 8 cedi a liter by March. You know why? What happens then? Fuel prices will definitely go up. When fuel prices go up, transport fares will kick in. Now, this is how it's affecting you, by the way, because government is now going to spend far more money just paying interest. Very little to do anything, including cushioning you in times of crisis when the Living Standard Survey says 60+% of you have less income now than you did before COVID. Government cannot cushion you anymore. So when the transport fares go up, government can't do much for you. There's no fiscal space. What happens is, what that will mean in essence is prices of goods and services will go up. Prices of your kenkey and bread will definitely go up. And this is one of the things that will go up definitely. Kenkey and bread. This one. You see the fish here? This fish used to be sold from what my colleagues did. Well, let's start with the kenkey. This bottle of kenkey here. You see here, used to be sold at 1 cedi. 1 cedi. This is last October. Today, this one is 2 cedis. We bought it for 2 cedis. So we have 4 cedis of kenkey here. So that tells you a story already. Times are hard. 1 cedi in October, 2 cedi in February. Think about that. This is 3 cedis. Is it? 3 cedis. And we used to buy it for what? And last year by June, 1 cedi 50 pesos. 1 cedi 50 pesos. Look at this. 3 cedis. So that is the story. This is going to affect you. Moody's, S&P, and Fitch downgrade directly affecting you. Your kenkey is going to be affected. That is fundamentally the story I want you to appreciate, because you've been hearing Fitch, Moody's. What does it mean to you? This is what it means to you. It has an impact. Government can't cushion you. Fuel prices are going to go up. They can't do anything because the fiscal space is constricted. And so you're going to be paying more. 1 cedi in October, 2 cedi in February, 3 cedi now. In June, we are paying this for 1 cedi 50 pesos. That's the story of kenkey, by the way, and I love kenkey. I'm gone, so you know what I'm talking about. But what about bread? Those of you who like bread, this is bread. Huge loaf of bread. This, by the way, is 10 cedis now. 10 cedis in February. Do you know how much it was just last year in June? The lady we bought it from said last year he was selling it for 7 cedis. Today, she's selling it for 10 cedis. I am not saying it is because directly of Fitch, because that was recently done, by the way. But what I'm saying is, going forward, it is going to get worse if nothing happens about the Fitch and about the S&P and about the others. That is, for me, is a key thing that you need to pay attention to. My guests are joining me, and when they join me, we're going to go into 2 key things very shortly. Bryce Simmons, a good friend of mine, he's joining me tonight. We are going to extend the show, by the way. And he's going to start by talking about the accuracy of these ratings. We need to get there because government says there may be accuracy challenges. And then we'll look at also the bias questions that had come up, also government raising. And then, of course, Finance Ministry will join me. Dr. Atufo Singh will join me. He was there, Deputy Finance Minister, also when Moody's and Fitch were rating Ghana. They also had concerns then. All that covered for you on this analysis. Stay with me here on PM Express. After the break, my guests will be seated. So joining me right now, as I earlier advertised, is Bright Simmons. Bright Simmons is joining us via Zoom, and he is the Honorary Vice President of Imani Africa. And I'm delighted that Bright can join us. At least now you understand why you should bother, why this may be affecting the man on the street, including myself, by the way. Of course, so that is important that Bright joins us. And Bright is going to give us a quick presentation on something that is fundamental in everything else that we've seen from the government since this happened, including a statement that was issued by the Finance Ministry. One of the key things the Finance Ministry said was challenging the accuracy of the Moody's in particular. And of course, the Africa Peer Review Mechanism believes that there's a case to be made. And so we'll get into an independent analysis of that question of accuracy. And then right after we are done with that, we would bring my other guests into the conversation, and so we can talk. Because joining me right now in the studio is a man who I'm happy because he's a technical person. Right, and for technical people, they only deal with the technical issues. I mean, and I'm happy that he could join us. He is Samson Aklego. He's a Director, Finance Sector Division of the Ministry of Finance. Right, thank you very much, Samson. And he's been looking at the numbers, and so he will give us a thing from a very interesting point of view on this. And of course, I said earlier that a man who was also there, he's experienced these ratings agencies' job at first hand. And by the way, if you go back, the NDC administration also had their own issues with the agencies. You remember the Sage consensus, there was a lot of downgrades, there was a lot of cost. Eventually, we had to go to the IMF. I mean, this all is tied. Don't let anybody kid you that this is something that is you can take for granted. That's why government is taking this very serious. And so Dr. Keisela Forcing will join me. As I said earlier, we will extend the time because there's a lot to get through for you to help you understand and appreciate all the issues from multiple angles. I will start first with Bright Simmons. Bright, the government's point in the statement that it issued, which the president had taken to the AU, or we've seen the AU statement, one of the fundamental things they raised is the issue about accuracy of the basis that Moody's in particular used to arrive at the downgrade that they did. You've been looking into this. What did you find?
For having me, Evans, and for putting together this really exciting conversation. So you've really done a lot of the work for us in the studio because your very thorough introduction kind of runs through most of the strands that constitute the analysis. So first, a couple of random thoughts that as I was putting together this presentation kept coming to mind. One is that nowadays a lot of the more sophisticated countries are building their own internal credit rating mechanisms, especially in the most independent institutions like the central bank. So if the central bank is nominally independent, typically they'll be doing ratings of internal debt as well as domestic debt as well as foreign denominated debt or debt that is listed outside or sold to international investors. And I haven't seen much on that front in Ghana. So if we have these, serious concerns with international rating agencies, I wonder why we haven't made more progress with internal credit rating of government debt, like a lot of countries actually have done. The other thing is also the fact that, and you did mention this, but I think it's important that we emphasize it. One of the reasons why the absolute rating is important is because for some of investors, they are barred from including securities, which include our debt that we sell on the market, like whether that's bonds or other fixed income products. They are barred from including certain types of products in their portfolio if the rating falls below a certain level. So that is why sometimes, you think of, okay, it's B3 to CA1, that's just one notch. Why is it so important? Because just by moving down one notch, you could significantly exclude a lot of investors who simply have a bar. They don't include any debt that is below a certain rating in their portfolio. That notwithstanding, the fact is that the Financial Stability Board, which is the global organization that tries to look at systemic risk, has been very adamant about not using credit ratings, particularly sovereign credit ratings alone, in determining the creditworthiness of any particular issuer, in this case, in the Ghana's case, a sovereign issuer. So there is this movement. In 2010, they issued guidelines that most sophisticated investors now more or less follow that guideline, and that is the credit rating, while important, it's a component together with other factors to create the composite analysis that you need to determine whether or not to lend to a particular issuer, whether it's a country like Ghana or a corporation like MTN. The last point I thought was, random point, but also quite important, is that there's a bit of a difference if you are in the same grade, but you are shifting notches. So if you are, let's say, B plus to B or B plus to minus, it's a problem, but it's not as bad as if you move out of your particular grade. That can exacerbate a lot of things. So that's why the Moody's rating in particular seems to have hit the government so hard. Now, to your specific question, I think it's also important that we bear in mind that this was a solicited rating. This wasn't an unsolicited rating. It wasn't like Moody's was there and then decided that it was just going to rate Ghana and cause problems for us. We went to Moody's, paid money, and asked Moody's to give us a rating for specific securities that we had sold. One of the interesting things about the current debt market is not only, when you take a normal loan, like a loan to build a dam, it's often hard for you, that loan, the person that's giving that loan, to sell it on to somebody else. Often they will need another counterparty to securitize it or something like that. But for these types of loans that we go out and borrow through the bonds, when you buy them, you can sell them. You can sell them on the secondary market. So there are a lot of ways in which, for that reason, you can use other metrics instead of the credit ratings to determine whether or not a country is credit worthy, because their bonds are traded in liquid markets. However, it helps when the government itself is trying to determine where they are to get a rating, because it helps investors, and they will normally be the ones that will pay for it. And most other people will then consume it for free. So we should be careful we don't make it look like, Moody's was roaming around looking for some African country to bully, and they went and issued some rating. The other thing is, yes, some of the ratings could differ, and we've seen some variation now between among the three rating agencies as far as Ghana is concerned. Perhaps a notch different variation among them. And that is because sometimes the ratings are not actually capturing the same thing. So if you take the most critical factor, which is the one that you pointed out, the risk of default, you will find out that Moody's does not only consider the probability of default, they also consider whether or not, if the default happens, if we don't pay, how severe would that be from a systemic risk point of view, or from other factorial points that are critical for investors that are looking at that analysis. I read the government's response, very robust. I won't say unprecedented, because in the over the last couple of years, countries have tended to argue about credit rating agencies and the impact on the economy. But it's a bit unprecedented in the way that the government went about making its case, going after specific rating analysts and suggesting that those rating analysts don't know enough about their work and they don't know enough about Ghana and the rest of it. That was quite unprecedented. A couple of points. One is, usually when we criticize rating agencies, we actually criticize them for being too optimistic, for keeping rates high when in fact they should be downgrading. So a lot of the subprime credit issues where they got their biggest beating and a lot of efforts that were made to introduce regulations for ratings agencies was not because they were downgrading they were too trigger happy in downgrading. It was because people felt that a lot of these so-called collateralized debt obligations and the rest that have been tranched, and then for all of a sudden, because of the engineering, fairly subprime components create something that was regarded as prime. And so it's actually the fact that we often criticize them for being too optimistic that there's call for ratings regulation. So for Ghana to suggest that being downgraded is somewhat arbitrary is a bit surprising. Secondly, and that is an important fact, when the ratings are being undertaken, you don't have just one person, the lead analyst, make the decision. They will make a recommendation with their team after they've spoken to the country, the principal, and all of that. But thereafter, there's a vote at the committee level. And that committee will normally have analysts that are very senior, including some that are very familiar with Ghana. And it's not as if the lead or the primary analyst that is assigned to Ghana is only doing Ghana. Typically, they do multiple countries. So this tendency to make it look like there was one specific person that was out to get us, I think it's a bit unfortunate, given the way that normally, the ratings we put together, including the vote, etc. Secondly, Ghana had an opportunity to appeal, as Ghana itself says, and that appeal was not to the rating analyst. That appeal was to the committee. And it's after the committee had looked into it carefully and looked at the evidence that was presented in the recommendation that they decided not to grant Ghana's position. The other question is whether, discretion is allowed at all, because there was a spot in Ghana's response where it questions the fact that certain arguments were made without quantitative backing. But every ratings exercise include both quantitative and qualitative, because you do need analytical judgment. There are instances where something that is on the rating scorecard, and yes, you need to adjust it because of other factors. For instance, if you compare it to a lot of our peers in Africa, our economy is quite strong. We have a big GDP, and we grow quite well. So typically, you expect that the 35% weighting in that segment, in the financial strength segment, etc., you get a full figure. You don't get a full figure though when you have other factors are important. One of the factors in our case was diversity of the economy. So when you have a situation where for instance, other not directly imputed metrics in the scorecard are important, you need analytical judgment. Somebody has to make a call, and that is also important. The diversity issue was raised, and I think that one of the challenges that Ghana has is huge commodity dependence. So if you look at across Africa, if you were looking at rate of electrification or some other metric, you wouldn't see Ghana paired with all these other African countries because we are ahead of them in that regard. But when you look at the degree to which we are super dependent, even Mali outperforms us. So that is an important fact as well. Then I made the point already that this is extremely quantitative and it's not arbitrary. 9 major parameters that determine, how these ratings are done. And all of those numbers will typically have to be presented to the committee as part of the package to determine whether or not the accuracy was right. But let's not forget, what are we actually measuring with these letters? You were absolutely spot on when you said the real issue is whether or not at some point in the future, given a current rating, the country would default or not. So where we are now, we're in between. If this is a S&P one, I didn't have time to pull up a Moody's one, but we are in between, CCC plus, B minus, thereabout, if you try and do a full equivalence with Moody's. And what it's really telling us that we are somewhere in between 11.7% to 46%, in between the default rate, 3 years for bonds that are due to mature in 3 years, if there was any bond that was due to mature in 3 years. So these are quantitative predictors, and therefore my argument that we have to be analytical about it is quite important. They are very precise. How do we know these rating calculations are not just being put out of like a rabbit out of a hat? Because there's been a lot of empirical studies that have shown that by and large, highly rated sovereigns don't default. So we do have that empirical data. And but I have to mention that even with default rates and those numbers I was showing, even with the low rating like CA1, you still have about 90% to 95% of getting your money back if Ghana defaults. So it doesn't mean that if Ghana is at the risk of default, nobody will lend to you because of these other factors. And like I pointed out a second ago, countries do default. And when you look at the ratings of the countries that defaulted, it tends to be the case that they generally map to the ratings numbers. So a lot of people have looked at those empirical data points and concluded that generally we don't have to play with the rating, because when countries are rated low, they tend to default more than countries that are rated high. So there's significant empirical evidence. So I can look through the list now and you see that some of the countries that are really at the bottom of the current pyramid, like Belize, Ecuador, Greece, Ukraine, etc., they are also the ones that are rated very low. Quick points to close. The other factor you've also already pointed out, which was that the repayment risk, the fact that we may not pay our debt, was already in the prices of our debt that was in the international market. Like I said, when people buy our debt, because these are packaged as bonds, they can sell them on. Now, when you sell it on to someone else, the price that you sell it on is determined by whether or not people think the bond is close to default, who may default in the future. So you have to sell it cheaper than you bought it. If people think that the person that the original lender lends to will not pay back, then you get this price, which simply means compared to a risk-free asset like the German bond or the US dollar or the US Treasury, the Ghanaian assets, or the Ghanaian security, pays way more. And the reason it pays more is because I'm taking a risk in buying it from somebody else, and I'm going to buy it for a lower price than they bought it for, because I don't think the payment may be as guaranteed as when they bought it. So those dynamics were already evident, and that you've already made a very good case for that. We already saw the fact that spreads were some of the worst, and particularly 2021, the last half of it. It was evident that we're underperforming most of our peers in that regard. The most fascinating one was comparing bonds that we've issued that have just 1 year difference in tenure. So one of them where you had a bond that was due in 2029 compared to a bond that was due in 2030. And just because of that extra year, you saw a major, almost a 2% spread between them, meaning that the closer the payment is due, the more likely we are to default in that regard. And that was a very interesting inverted, that was powerful. And the other is just the fact that people were only willing to buy a bond if you paid a lot more compared to almost every other country at some point towards the end of the year. So all of these factors were heavily on the mind of the rating analysts when they were writing. And so when we went to them and asked for a rating, we should have known that this was going to come, because all along people were expecting that fiscal consolidation would be very robust. That's not what we did, though. Look at the way that we decided to structure our fiscal plan for this year. Rather than to try and reduce expenditure and be more optimistic about realistic about revenue, we are super optimistic about revenue. And until we decided to do a 20% restructuring of expenditure, and that was only after the rating exercise had started. It was clear that we intended to spend even way more. We wanted to move from about 110 billion, which obviously we couldn't hit, to something like almost 140 billion. And then we thought we could increase taxes from 56 billion to like 80 billion. These are massive numbers. And to expect that a 43% increase in revenue constitutes a fiscal consolidation plan, I think is not very realistic. And most investors decided to punish us for it. And it was evident. You see that after we put that budget out, investors have continued to punish us because the yields have continued to deteriorate. Now, I think we should take Dr. Bawumia's advice in 2015 in the way that we look at all of this. I think when we had our last Moody's downgrade and he went to speak at Central University, he outlined the situation very clinically for us. The analysts were rightly skeptical, and the investors are not yet convinced. Those are the key phrases that come from that speech, which I think apply to today. The skepticism is justified given everything that has led to it, and the lack of our lack of focus in trying to convince investors by scaling down on expenditure, at the same time being more realistic about revenues, I think are the factors that have damaged us. Thank you so much.
We'll come to the bias question shortly, but Bright, quick yes or no question to this to conclude. So on the question of accuracy, are the ratings agencies accurate, particularly Moody's? Are they accurate in their downgrade, yes or no?
Yes.
Okay. Stay with me. Let me bring in Mr. Atligo with me in the studio here. He's with the Finance Ministry. He's a technical individual there in charge of investments indeed. I'm grateful. So there's something that Bright touched on and I want to start with. You're also with me, by the way, on Zoom is Dr. Kesa Atofosing. I'll bring him very shortly and to react to what we just had there. It's the fact that these ratings that we've seen, the ratings agencies, it's solicited, as in we almost sort of asked them to do it. Did we pay for these ratings as a country?
Yeah, we subscribe to these rating agencies.
We subscribe to them. Yes. I mean, explain, how does it work?
No, so for example, typically if a country like ours is going to access funding from the international capital market in particular, you need someone to give you a credit opinion, a credit color. So, and to do that, you have to invite a couple of rating agencies to look at your credit metrics and give their opinion, which comes in the form of rating. So I think, so especially when we started in 2007, the intention to access the international capital market, we have to go through that process. And then I think, I don't remember exactly, but I think we started with Fitch, and then we move on to the other three, because usually countries and even corporates, they don't allow only one rating agency to rate them. Yeah.
Okay, so that is how, so Moody's is one of those you subscribe to.
Yes, yes.
Okay, so as was said, so this is not as if Moody's came here and did this independently. We knew we were going to do it because we subscribed to them. We in essence, we pay for them on a regular basis to do this for us. Okay. I mean, and so the question then automatically comes up is about if you're subscribing to something. I subscribe to a television channel. If I don't like what they give me, I simply end my subscription. I mean, so why are we complaining if we subscribe to it?
Evans, I don't think it is complaining. If you see the way rating agencies work, even though you ask them to rate you, they are very independent. So the rating agency comes to you and go through their process. And in fact, behind that process is a lot of analytical work. And this analytical work comes with a lot of assumptions. They have their models, they have the things that they look at. And a lot of the data, actually, they even get from the country. And then based on that data, they build on it. So in the process of that independent work, even within their framework, there's a country engagement process. And sometimes when you have that dialogue and then the two of you maybe don't agree, you can't ask the rating agencies to do it because they are independent. So, and I think it's important for that process to continue. The option that is available to the country is that you appeal, but if you feel strongly that you have some sentiment to express about the rating, just like in every country, you also express.
So what's the end? When you say appeal, are you expecting that they would change their downgrade?
No, so when you say appeal, usually even before they even go for their rating committee, as Bright explained, they even give you some opportunity to correct some factual errors. And if you have some challenges with that, you can actually...
Did they give us that opportunity in this case?
They did.
And you gave them...
Yes. We gave them...
in your complaint that we've seen, your accusation is that although you gave them, they failed to factor that in.
Oh, I wouldn't say accusation. We also have to state our side of the story. So,
so your side is that you gave them and they failed?
Yes. So we presented, for example, maybe they are saying that, maybe if they look at maybe our debt part, by the next 3 years, the country's debt to GDP is going to be this. We also have our debts sustainability analysis. We have our policy intent that is very clear, and we disagree with what the assumptions that underlies their credit. And
what
I think it's important that because we are in the market, we also have to state our side of the story, because as a sovereign, our job is to make sure that we also defend
your integrity.
But I mean, it doesn't change.
So fundamentally, this appeal, it's not, you're not expecting that Moody's would reverse or change its rating?
No.
Okay. So is it fair to say that if I'm an investor, all you're saying is you want the investor before they make the decision? You've seen Moody's, you've seen S&P, you've seen Fitch. See us. Look at what we are also saying about ourselves and use that to make...
It doesn't happen like that. Usually those happens when, for example, in this case, in the case of Moody's in particular, we disagree with some of the assumptions.
I guess I'm asking the question, the purpose of the review, if you don't expect that Moody's will downgrade. The purpose of the petition, yes. If you don't expect Moody's to downgrade, what's the purpose of that then?
No, the main purpose of the appeal
yes.
is to say that, look, the analyst has done his or her work. We have had a conversation. We asked questions about what they have done. We presented our case as well. And then we're expecting that collectively we'll have like an opinion that reflects something. But if the analyst says, I stand by my days, the only thing you can do is also to let people know. Okay,
so that's the point I was making. So and when you say people, in this case, the investors, the investor community, globally, you want them to also see your side of the story. Now, let's go to something that Bright said at the end. So Bright's conclusion is that you raise issues about the accuracy of what they've done, because as you said, you gave them information that they didn't factor. Bright says assumptions. Bright says what they've done, spot on.
I mean, quite frankly, the work of the rating agency, nobody can question, and that's their job. They have done their job.
Nobody, but you are questioning it.
No, you can't question them in terms of the output. That is their rating. Our job is what we have done. We are saying that based on the assumptions and the conversations that we had and the data that is also available to us and the analysis that we have done, this is our strong view.
Yeah, but you're questioning the conclusions they've come to. You're questioning not only the conclusions, how they arrived at it. So in essence, you're saying it is inaccurate.
Yes. No, so, I mean, we can disagree. And when we disagree, we make our points very known. And our position is that the assumptions underlying a lot of the forecasts, honestly, from our view, it's not accurate.
Okay.
Yes, yes.
Okay. So it's not accurate. I mean, as far as you're concerned.
Yes.
But the question I need to ask is, before I bring in Dr. Kesato-Forsing, is why are you subscribing to 3 ratings agencies when clearly you've isolated one, because all of them had, Fitch downgraded us, S&P kept us where we were last year. So your real issues with Moody's. Why are we not unsubscribing them? Why are we using the 3?
No, it's not. It's not. It's as I explained. It's not. It is not like a fight with Moody's. You see, it is. It's just like analysts. When you.
But it's a requirement on the international market that you can use at least 2. You're not obliged to use 3.
Yes.
So if you can use at least 2, you don't need Moody's.
Yeah, but Evans, don't look at it in terms of government disagreeing with Moody's to the extent that we want to do away with Moody's. In every analytical work of this nature, it will come a point that 2 people, because remember, the Ministry of Finance, in fact, the Ghanaian institutions, Ministry of Finance and Central Bank, also have experts. In the Ministry of Finance, we have a debt management division. There's also a credit, people who look at credit in the Ministry of Finance. Also, we even have rating advisors who work with us. So it is not about saying that, Moody's has done something that you have to entirely avoid them. But it's important that we make clear our point of disagreement with Moody's.
Dr. Kesato-Forsing, you come to this conversation, yes, you're a politician, but you've experienced the wrath of these agencies before. First, give me your reaction to everything you've seen already. Heard me say in my presentation, from Bright and, of course, Mr. from the Finance Ministry. What's your own reaction to all this that is playing out right now?
Evans, thank you very much. To start with, let me say that personally, I was surprised to hear from the Ministry of Finance in that manner. The kind of statement that the Ministry of Finance issued, I least expected it to come from the Ministry of Finance, because I find it to be more or less a personal attack on the primary analyst. And I think it is really not fair to come from a reputable institution such as the Ministry of Finance. Yes, you can disagree, lay out the reasons why you disagree. But the kind of language that they used, I strongly object to it, and I do not think it's good on us as a country. And in fact, if I may put it bluntly, it's an embarrassment on us as a country. Because why am I saying this? I say this because I've heard the Ministry of Finance talk about the fact that there are some inaccuracies, particularly with data. I mean, listening to the director from the Ministry of Finance, they've not been able to point us to current data that the ministry apparently presented to them, of which they think that it is wrong. I mean, that is not the case. They are talking about forecast.
Yes, and that's an important point. Aklego, please note that for me. Specifically, what did you present them that you believe they didn't include? You need to address that for me. Yes.
That for me is critical, so that we can all have a discussion around it. So if you tell us that you presented the fiscal path, they will obviously look at the past, what you've been able to do with your fiscal. And if it points to the fact that the path that you are projecting is not realistic, they can also change their forecast and forecast using your past performance. So I disagree with them completely if they are talking about the path and concentrating on the forecast. I will not agree with them. The key issues here has to do with how sustainable Ghana's debt. Evans, as we speak, I am projecting Ghana's public debt to hit 83% by December 2021.
83% to GDP.
83% to GDP. Okay, as at November, the math points to the fact that it's 81% of GDP. Yes, I've heard the ministry actually reporting 78% of GDP, but it's important for us to note that this excludes the energy sector levies bond, the ESLA bond. This excludes the Sino-Hydro money, and this also excludes the GET fund securitization, which we call the DACHI. It's excluded. If you are to add all of them, you are talking of 83%. Evans, you projected a particular graph with the revenue performance. If you can project it again, I'll show you something.
Yeah, I mean, producers, please give me the graph in which we show the revenue projections. Let's make the point. But you can make the point.
You will notice that the revenue that you projected of about 100 billion that you talked about,
yes,
that revenue, that's total revenue. In it, you have tax revenue and grants.
Yes.
So tax revenue itself is about 80.1 billion Ghana cedis. 80.1 billion Ghana cedis. So of this 80.1 billion Ghana cedis, we have revenue called the energy sector levies proceeds, ESLA. So you are accounting for it as part of the tax revenue. You are also accounting the GET fund. You know, GET fund gets 2.5% of the VAT revenues. So 2.5% of VAT. In fact, you are accounting for the bauxite royalties as well. So all of these are part of the total revenue. But when you go to the expenditure, particularly the interest payment, this interest payment that you are showing excludes the interest payment for one, the energy sector levies bond, the ESLA bonds. It also excludes the interest we are paying on the back of the GET fund loans, and also excludes the interest we are paying on the back of the Sino-Hydro loan. So the interest payment that we are reporting of 37 billion, for me, it is overly underestimated. That is not the total.
So the bigger point you're making is, and the point I was stressing earlier is, so what you're saying is, now that we have the ratings agencies downgrading us, with the possibility that we are going to be paying more interest rates, and your point that we haven't factored in other elements already, you are actually saying that even my projections that we might cross this is going to be significantly worse than that.
Evans, you are too charitable. Your projections are overly conservative because you have excluded certain key drivers. For instance, we have borrowed 9.3 billion Ghana cedis on the back of energy sector bonds, ESLA bonds. We have borrowed about 2.3 billion on the back of GET fund receivables. All of this, you are using the same tax revenue to pay. So the tax revenue, or the revenue of 100 billion you are reporting, includes the Energy Sector Levies Act, the proceeds coming from there, includes the ESLA. But when you get to the interest payment, you are excluding that. So you are underreporting.
But Doug, I mean, isn't there a justifiable reason why we shouldn't add that to our desktop? Because those are identifiable sources and they come in. So ESLA, we're paying already the levy. So when it comes, you use to service it. In the same way with GET fund, which of course there is a levy for that. So that goes directly into that.
Okay, so Evans, let me take you through this. First, I have said that the debt to GDP is 83% by December. But I'm not going to dwell on that. I'm going to dwell on ability to pay this debt.
Okay.
Yes, we have countries that have debt to GDP of, let's say, 120, 140%.
Yeah.
The ability to pay is not the same as Ghana's ability to pay. The load I can carry will be certainly different from the load that my daughter can carry. So we can't carry the same weight. The weights are different. You use revenues or your tax revenue to service your interest. You don't use your GDP. Yes, the GDP helps you to generate the revenue. But your GDP is not the one that is you are not using that to pay your debt. You are using your revenues. So you want to look at the ratio, the percentage that you will use your revenue to service the interest. So you have been able to collect X amount of money. How many percent of that money are you using to pay your interest? Or how many percent of that money are you using to service your entire debt? If I see certain threshold, then you are not sustainable in terms of ability to pay this debt. So ability to carry the loan is most important. That's why I do not dwell on the debt as a percentage to the GDP, because it means nothing to me. What it means is that it gives you some scenarios, and that is why in advanced countries, they are paying, probably their debt to GDP is about 140%. But they are using about 10 to 15% of their revenue to service those debts because of Obviously, they are collecting more revenue than us because of how formalized the economy is. We do not have that.
I mean, but just a quick point. On the Moody's ratings, which government is very upset about, Moody's looked into the crystal ball and still says the output is stable, right? I mean, so definitely the government must be doing something right here in the long term that gives Moody's the confidence that's stable. We can possibly turn this around.
Don't be deceived by that. Don't be deceived by that. First, you are CAA1, or in other words, triple C.
Triple C,
CAA1. Yes. So if you are that rate, you can be positive, stable, or negative.
Yes.
So under that high risk category, we are stable. Already we are C, triple C. So stable at triple C, in fact, you are super junk. You are almost at the bottom, and you will struggle to service your debt. That's what they are trying to say. So don't use the words, what do you call it, whether it's stable, negative, or what. What is important is that we are at triple C. And triple C stable. So it means we are staying there as it is.
Stay with me. I mean, stay with me briefly. Let me bring up. So he raises the point about, first address the point about some aspects of our interest payments have not been captured in what the budget had reflected. Is that accurate?
Yeah, no, I'm not. I was trying to understand the exact point that maybe that
the ESLA bond payment have not been.
But the truth is that the fiscal reporting framework, is something that is very formal, structured, and I think that the official figures from the Ministry of Finance captures the totality of the interest payment, and,
including the points that he mentions.
For example, if you if you have an asset-backed security that has been done by Get Fund on the back of cash flows that come into the budget, then it's quite the understanding that maybe it is something that is going to be within the fiscal framework that to get the debt to be within. When you come to the central fiscal reporting, that usually is not how it's done. So
to that substantive question I asked, he raised it, which I want you to address. The ministry says, and you said here also, that you gave Moody's some information that they failed to include. Give us an example of that.
I can give So, for example, when it came to the issue of you mentioned the debt to GDP forecast, it was very clear that, for example, they said our debt to GDP for this year is going to exceed 80%. I think 81%. But official figures from the Ministry of Finance as of November shows that debt to GDP is around 78.4. Even the projection by the Debt Management Office clearly shows.
So you're talking about Moody's?
Yes.
Because there was an earlier statement on Bloomberg.
Yes.
That is, Bloomberg had talked
Moody's,
about
one of the key areas that actually the assumptions is the debt
to GDP.
Yeah, the debt to GDP, and
they use what rate did they use?
They expect the debt to GDP, even to actually go to a level that is way beyond what is within our debt sustainability framework.
Okay, so
our understanding of that particular assumption was totally way off what. Clearly the official figures that we gave.
So your official figure, the projection is what?
Yes. So for example, this year, we don't expect, even by December, the Debt Management Office doesn't expect debt to GDP to exceed 80%.
To cross 80%?
80%, yes.
You don't expect that? Okay, but they had used a figure above 80%. Okay. Did they include your announcement that you're going to cut expenditure by 20 billion?
Yes.
Did they factor that in?
No. From the discussions that we had, we felt that was not strongly reflected in their analysis as well. Okay.
Bright, let me ask you a quick question on that point, because that's something that you took on earlier. So let's come to this GDP question. Government says our projection, which is official figures, we are subscribing to you, and so you use the data we give you and your independent analysis. Our data says we are not crossing 80% to GDP debt, that ratio. And yet, the Ministry of Finance says, but Moody's use a debt to GDP ratio beyond 80%, and that definitely then will give you a different outcome. What's your reaction to that? What's your take on this?
both gentlemen, Mr. Forson and Dr. Forson and Mr. Aklego, make defendable or defensible arguments in the sense that it's a forward-looking estimate. There is the whole point of the rating is I hold certain assets or securities, or I've lent money to a particular entity, whether it's a government or somebody else. What are the likely factors that will affect the ability to pay me when the debt is due? Now, from both Dr. Forson and the Moody's analysts, the view, and I think Fitch also had a similar inclination. I think earlier on the government had really quarreled with Bloomberg over these projections. So it looks as if the majority of analysts believe that given the current fiscal performance, given the current liabilities that the government have and how the liabilities are evolving, it is very likely that their debt to GDP will cross that threshold. I think reasonable people can disagree. Where I will draw the line will be what is the weight of analyst opinion and where is it tilted? I think right now the weight of analyst opinion is tilted against the government, unless Mr. Aklego has a view that other analysts have said different things and we've not looked at it. Because when I look at the majority of the analysts who have looked at this situation, they seem to think that the government's revenue measures are too optimistic, too aggressive, what the government thinks they can collect in revenue. And they seem to think that the government's ability to grow GDP to a certain degree, given all these headwinds, is also too aggressive. Now, if GDP doesn't grow at the pace at which government wants it to grow at, and if government starts to borrow massively domestically in the market, and for that reason, we see crowding out effects and other adverse events, then the likelihood that the government's the government's total debt to GDP will go up is high, because you are most like in a treadmill. You are borrowing quickly to cover fiscal deficit growth. And so the question is really, to what extent will fiscal deficit grow, given the pressures that are on there? If the deficit widens, you have to borrow to fill the deficit, unless you want to stop paying people. And capital expenditure has already been declined a little bit. So it means that there you can hide behind arrest, right? You don't pay the contractors. But when it comes to recurrent expenditure, that is almost like hardwired in. You can't not pay. Ghana has a reputation, unlike some other African countries, of always paying public servants on time. Yeah, that's part of our reputation. So my sense is that both parties make reasonable arguments, and reasonable people can disagree. Yeah. But I will go with the weight of analyst opinion, which seems to tilt towards the view that the government may not be able to keep it under 80%. Yeah,
let me ask this. I mean, there's also the factor of the 20 billion. When everything happened this year, the finance minister announced that we are cutting expenditure by 20 billion. I mean, if that indeed happens...
20%.
Sorry. Yes. So won't that then play into this debt to GDP ratio and ability to stay within our means and control the deficit?
I think the economy has become very susceptible and sensitive to government spending. How government spends in the economy seems to be extremely critical nowadays in stimulating growth. If government wants to really cut 20% off, I think they will have to revise their growth forecast too. And if you revise your growth forecasts and your GDP is not growing as fast as you anticipated that it will grow at, then it will have an effect on your debt to GDP ratio. You get the point? Yeah. So there are fascinating trade-offs that make this a very fascinating kind of balancing act to get right.
Okay. I mean, I want to move to the next big controversial subject, which the finance ministry had raised. And then we'll come to the debt question, because really this is a debt conversation. And then how did we really get here is the final thoughts that we'll end with. And Keso will join me with that also. But in the statement, Mr. Aklego, that the finance ministry issued, you actually raised the issue about bias. You say, we are gravely concerned about what appears to be an institutionalized bias against African economies in this aspect, as credit rating analysts assume highly conservative postures and low risk tolerance for African sovereign credits, with little regard for the adverse impact on the cost and access of financing for African sovereigns. That is a very strong accusation. What is the basis for this conclusion?
Yeah,
that they are biased?
I think this particular statement was actually trying to maybe underscore the importance of the fact that COVID. If you look, you were asking the question about, maybe how did we, especially in the 2020, 2021, the debt conversation changed a bit differently. But to just get to the latter end, this particular statement talks about the fact that if we see the COVID adjustment to the deficit, especially in the case of Ghana, and then a rating decision has been taken in the midst of just immediately after post-COVID, the conversation cannot be, we can't pretend that it's a normal conversation. And that is what actually led to this conversation. And then it's also within the context. If you look at what has been happening across a lot of African countries, for example, I think in 2021, Egypt, for example, the same, you mentioned that the African peer review mechanism talk about Ghana. This is not the first time they talk about Ghana. In 2021, Egypt actually talked, even though they were not even downgraded, they felt that the rating agencies should have even upgraded them. And the Africa review mechanism actually supported them in that demand. So the totality is that COVID in particular, has actually made our situation a bit more difficult because in 2020, if you look at our data, revenue actually fell by almost about 15 billion, if I do remember. And then also we have expenditure increasing by $1 billion. And that had a significant impact on the deficit, the borrowing requirement, maybe in 2020. So, and we think that
So in other words, you're saying that they're not being fair to Ghana?
We feel that adjustment for the COVID is something that...
You're almost suggesting that they are doing something different for other countries or other continents and treating us worse?
Yes, because if you look at for example...
And I want to see what the evidence is. Which example can you point?
Oh, I can point to... A lot of countries have actually significantly increased debt. You don't want to mention what, for example, if you look at UK, if you look at the data, for COVID, their debt has actually increased. And that's a fact. Even the big economies like the US.
So you're saying, COVID, your fundamental question you're asking on bias is, so if they also increased there because of COVID, why are you not also downgrading them or you're downgrading us?
No. So the fundamental question is that we can't compare it in a lateral way. The fundamental question is that we felt that the conversation that we had and the impact of COVID and the post-COVID reforms that we are putting in place should know that what happened was not the regular business, especially if you look at the trend.
But that's not a bias. That's not a point of bias. It's about whether they ignored the realities of today or the current circumstances of COVID. Is there a question of bias?
Yes. When you have, rating actions, we take them so important because they have a secondary effect on the economy. And when you recover from a very serious pandemic like COVID, and that COVID has also led to some elevation of debt level. What is important is that you have to adjust for those things when you are doing assumptions.
You said they didn't adjust for that?
Yes, so we felt that adjustment and recognizing the serious impact of COVID is very important, especially for small open economies like
Ghana. But Bright, I'll take a quick break now. When I return, Bright is going to dig into that question of bias. Whether Bright agrees with Ghana's position that indeed the ratings agencies are being biased against Ghana and other African countries. I will ask the same question of Dr. Forson, who was the deputy finance minister then in 2014, etc., when they also rated it. Did he also agree that there's a certain conspiracy that may be disadvantaging African countries in these ratings? After the break, we'll delve into that. And thank you very much for staying with us here on PM Express. And if you've been with us, my guest, Bright Simmons, is the Honorary Vice President of the Money. He's joined us to look at this from a very independent point of view, analyzing the ratings agencies and the downgrades that we've recently seen. Also with me in the studio is the Finance Ministry's Technical Director, who, of course, has been helping us navigate this area with, we've seen government position on this, a very strong indeed position that they've been articulating to the international community. And he is Samson Akligo. And Samson Akligo is the Director, Financial Sector Division of the Ministry of Finance. And this with me in the studio. Also with me is a former Deputy Finance Minister, Kenkey Latil-Forsing, who is definitely with me on Zoom. I'm going to go now to the key question that I came to. But as you see on the table, if you missed at the beginning, this is a technical conversation. We don't want it to be so, because the issue about the ratings agencies downgrading us have real life impact on all of us here, including the price of the kenkey that you buy and the price of the fish and the bread. And we illustrated that at the beginning. Bright has done a bit of that also for you. And so that is where we are coming from. Want you to understand why this is important and how this affects the man on the street and why government is taking this up very strongly. But government has also alleged some bias, as I said earlier before the break, in the approach that the ratings agencies are taking. Bright, do you agree with government that there is bias in the ratings agencies' work that they've done?
Evans, am I next to speak?
Yes. No, but this Bright Simon very quickly. I'll come to you shortly. Bright, do you agree that there's bias in the ratings agencies' work that they've done?
I think once again, you set us up very effectively. The question of whether or not there is bias is exactly what you framed it to be, which is there any evidence that somehow Ghana is being treated unfairly or not? And also, it's important that we establish from the outset that because the government is taking this so seriously, it means that these ratings will impact the government's ability to deliver on its mandate, which is why we are also taking it seriously. If indeed, however, the government's attitude to it, which is that it's generally inaccurate and it's generally biased, is correct, then we don't have much to fear. If, on the other hand, it's not correct, then it will be important for the government to modify its posture. So that is why this analysis is so critical. I'll go through by taking you on the very thing that you raised. Is there any evidence that somehow Ghana has been treated particularly unfairly? And I think this starting phrase or this starting quote, it's very, it exemplifies the kind of analysis we need to make. If Ghana is spending nearly half the money it raises to pay back interest and principal repayments, and the average country that is rated in the B band uses 11%, that is ridiculous. It's really massive.
Yeah,
difference.
I mean that's actually shocking information.
Exactly. And so we said, okay, let's look at where we were before we were downgraded by Moody's. We were at B3, right? So what were the other countries in B3? And I just went around and I listed all of them. And when you look at the countries that are there, they include countries like Cape Verde. Why is Cape Verde in B3 now? Because 30% or so of its income is from tourism, and COVID has had a huge hit on tourism. This is clearly a country that can blame COVID for it, right? But when you look at across the table, it's not clear that COVID will particularly hit all these countries so hard that they all have to be at B3. So that's an important point. I'm making the point that some countries, because of the huge tourism component of their GDP, are particularly vulnerable to COVID because of tourism, right? So Cape Verde can make an argument that all the issues that it's facing is episodic. It's just because of COVID. I'm not sure that some of the other countries can do the same. And Ghana is certainly one of the countries that was at B3 that was trying to do so. But the other point is the graph on your right. Have you seen the gap between Ghana and the other countries in terms of how much of its income it spends on paying debt?
That's very significant.
Good.
Very significant gap.
You go to the next one, which is the countries that are where we are now, because we've just been downgraded CA1, right? And when you look at the countries there too, you see clear evidence that here too, in a way, if you took our capacity to pay and the likelihood of repayment risk being the primary indicator, of course it's not, but if it was the primary indicator, it would be evident that even CA1 seems a bit too good for us, because look at the gap again between us and the next country on that list, Barbados. Now, if Ghana is suggesting that, somehow these measures don't correspond to the actual issues on the ground, we will have to account for why the countries that have been listed have been listed.
Yeah, and
First,
we are there with a country like Iraq.
Mm-hmm.
Goodness.
So what is it? Is it that the argument is that Iraq, for some reason, its COVID impact was particularly bad, and somehow its COVID adjustment is not being factored into the ratings? Because this is where we've been brought to, right? You look at the band, and what I look and what I see, I don't see any evidence that there is some primary driver of bias, that there's something about all of them which suggests a particular attitude. Certainly, they are not all African countries. We see a mixture of countries in the Middle East, Latin America, and the rest. Yes, most of them are middle income and not so wealthy countries. But yes, if you are not able to pay your debt, it's likely because you're not so wealthy. But it's a mix of countries from all over the world. The Pacific Islands, countries in Latin America, countries in North Africa, and countries in the Middle East and us. Secondly, also, there are not a lot of countries. That's another important point to bear in mind. We are talking of less than 10 countries in the whole world that are in CA1, right? So why is it that, what is it about Ghana that will make them decide to pick up Ghana and dump us there? You have to ask yourself that. And then the fact of the matter is that even where in this club, we are still spending so much more of our national income paying debt. That's critical.
Mm.
Look at the countries that are worse than Ghana. And look at the mix also. Here too, you have countries in Asia, you have countries in Africa, countries in Latin America. It's a mix of countries that are not so wealthy. But that is to be expected. Because if you are very wealthy, then you have so much capacity. There are two reasons why the United States, for instance, no matter how much debt it borrows, it's never at risk of default. One of the reasons is that the dollar is a reserve currency. If you push it to the wall, it just prints dollar and pay your debt because it borrows in dollars. We don't issue dollars. So if we borrow in dollars, people are worried about whether or not we can pay for it. Most of these countries here have certain things about them that is worrying. And the fact that they reflect the ranking, the ratings, is important. So Ethiopia is in war. You have Mozambique that has defaulted. You have Sri Lanka that is, they have a mixture of complicated mismanagement, corruption, insecurity. And these are the countries that are worse than Ghana. And it's evident that they must be worse than Ghana. But even them, we are still spending so much more of our income paying debt compared to them.
Wow.
That's very fascinating.
But very indeed fascinating. Okay, yes, I think this. Okay.
I'm about to end. Give me just 2 minutes,
okay, sure.
And I'll end very soon. The other point is also that when we talk about analytical judgment, is the fact that Ethiopia and Ecuador, who are both either ranked with us or ranked below us, are growing faster than us. And yes, so that was not enough to offset their rating. It tells us something. It means that you need analytical adjustments sometimes. Because if Ethiopia has insecurity issues, it doesn't matter that it's growing rapidly. If Ecuador has serious problems with its fiscal governance structure, it doesn't matter that it's growing very fast. So this notion that we are growing fast enough or we have a big GDP is not enough. And that is another piece. These are pieces of evidence that we are not being unfairly treated. The other point is about currency risk. And here, when you look at some of the countries that are in our neighborhood, you'll find out that in the last half of last year, we started to degenerate in currency performance, which is also a major risk factor because our debt is issued in dollars. This is the most important point, and I promise I'll finish in a minute. That point is that increasingly, among all our peers, we have the most non-concessional debt in sub-Saharan Africa, outside South Africa, by which I mean that debt that is highly commercial and highly expensive. So if you look at this chart that I've just put up there, you will see that Burundi is actually the country with the highest debt per GDP, right? 175%. You see that the Gambia is in around 150%. Mauritania is around 125%. So Mr. Aklego is absolutely right when he says that our 80% is not that frightening. But here's why it's frightening. It's frightening because when you take Burundi's debts and you see the breakdown, you see that more than half the debt is owed to the World Bank, another chunk to African Development Bank, another chunk to bilateral partners like France, Germany, and the rest. Almost none of the debt is commercial. So the World Bank rate is so low, sometimes below 2%, sometimes zero. Same with IMF and the others. That it turns out that notwithstanding the fact that Burundi has like 175% debt, whatever, we still spend maybe 4 times more paying our debt than they do.
I see.
The perfect case study for it is Kenya, because another lower middle income country, a little bit bigger than us, but not that different from us. You see, therefore, that their ability to split their debt between commercial, you see commercial debt is only 30%. Look at Ghana's one on the right side of the graph.
Yeah.
And it started a long time ago. So what I mean in simple terms is that we have to start thinking about how do we get some concessional sources of financing that is not so expensive. And here, my point is not to make a case for the IMF, but to remind the government again that it's not all IMF products that come with concessionality. These are the 10 major IMF products. We always go and get EFF, ECF, because that is, we wait too late until our situation is desperate and we get a West product. There are products like RFI and the rest where indeed you do not have conditionality. We should definitely be pushing for an RFI program. But if we keep waiting till we are late, then we're not going to get it. That is the point.
I mean, Dr. Forsing, your reaction and wrap up for me with your thoughts on this.
Thank you very much. I gave a file to your producer to project it for us. But even so, I would say that Ghana's problem has to do with three things. Number one, we are borrowing too much. Two, we are spending too much. And three, we are not correcting enough in terms of revenue. So three things. And I tell you why we are borrowing too much. And you will notice here that if you look at the Euro bonds that Ghana is owing today, between 2013 to 2016, the previous administration borrowed about 3.75 billion Ghana cedis, billion US dollars from the international bond market, 3.75 billion US dollars. And in the space of 4 years, from 2017, 2018 to 2021, this administration has borrowed up to 16 billion US dollars. So that is why I'm telling you that we are borrowing too much. And if you can look at the price there, the current price and the rating agencies, what we have there. But to surprise you to know, and that is why I am not faulting Moody's at all. The price that we are paying here is equivalent to CCC. In fact, the price that we are paying here, if you do comparative analysis, you will get to understand that no B- is no country rated at B- is paying this rate. Our yields are so high, and Ghana is being punished. Yeah. Obviously, because of this.
Doc, just give me a second there. I mean, that debt matter that he just raised there, as we wrap up. Can you address it for me? How did we get here? Very briefly, because before we wrap up.
Thank you, Evans. I think this this statement is very important. You see, when we do the debts analysis and it's very static, then it will be very easy for us to probably not appreciate, you know, the whole framework of where we started from. And I'll just quickly probably start somewhere in 2017.
Very briefly, because of time, we just, yes.
For example, if you look at 2017, the reforms that were done, you realize that by 2017, there was really a need for us as a country to create fiscal space. So a lot of reforms were put in place to anchor the debt and make sure that the debt comes down. You remember there was ESLA. There was ESLA, the whole ESLA concept came because of the liability management, the capping of the earmark funds. In the result of this was that by 2017, the debt to GDP, which was about 56% of GDP, reduced to about 54%. You know, and then later on, the fiscal anchor was even done to ensure that we have we have a primary surplus. What happened? Unfortunately, the country have to absorb two very like difficult decisions. There were two. The two were the financial sector cleanup.
True.
The financial sector cleanup.
Over 20 billion.
Yes. No, even over, no. The financial sector cleanup and the energy sector IPPs. We didn't, in fact, actually, we were even in the IMF program. So what happened was that we have to have two levels of deficit reporting, one that is normal and that is one that is below the line. The total payment, the total debt accumulation from those two alone is about 50 billion. That is almost 15% of the total public debt stock. Unfortunately for us, a lot of those debts were even domestic. And we have to find it because it is important to keep the financial sector and of course the energy sector for growth to recover.
So those two
alone contribute to that. Okay. You understand? And those also added significantly to the interest rate payment. So what happened was that by 2017, by 2019, already the debt situation was, it was being managed in a way that we knew that post 2020, the anchor would even come down further.
Yeah. And then COVID came.
Yeah, then COVID came in 2020. So the COVID actually, and I said, look, this is what happened. In COVID, revenue, the country's revenue projection in that budget fell. And then expenditure, because we have to make sure that we intervene in the economy, went up.
I mean, but so some people disagree with that, though.
No, but you see, that is the figures.
I get it. I mean, those are the views from the finance ministry. We just run out of time on this, but I'm grateful that you detailed that. I mean, at least you detailed the path.
But it's important that it's important that we put the analysis in context. And the last thing I'll say is that, so when it comes to Ghana's debt situation, the post-COVID reforms are even more important than the past. Okay. So the question is, what are we going to do to make sure that we anchor the debt, and that is what we've started doing. Especially
I'm grateful. Bryce Simmons, I'm grateful. Atufos, I know you had a bit more to say, but we'll return to this conversation about debt by itself as we move forward with these reforms. Thank you very much. Of course, the Kenkey and Fish is here. You've made the point. You've seen the point already. Well, I'm going to dig into that. I mean, this is 1 CD before October, now is 2 CD. This is 10 CD now. It used to be 7 CDs. The story is very clear. Impact on you is obvious. Join me again tomorrow for PM Express.